Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello, everyone. Happy Monday. If you can hear me and you can see my visual, say good morning and let me know, that everything, all the sound, the audio, the video, everything is ready to go. Now, we're just beginning our session, so it's going to be an incredible trading week in the sense that we have a lot going on. Tell me what you're watching and, what is the number one event? It's a little bit of a test, but what do you think is the number one most important event on the calendar this week? What will you be watching? What do you think is going to determine where everything goes this week as well as next week? As everyone kind of streams in, I'm going to give you an opportunity to tell me. My friend Joe. Yes, Joe. How long have you been trading, Joe? Joe is one of our newest live stream members, and he seems to be a lot more, Joe, you're a lot more in tune with the markets than you had told us a couple weeks ago. I think Joel told us he was brand new, and he's right on top of it. Yes. Okay, not trading yet, studying. That's a really good place to be in. I think, that's fantastic. Yes, 100%. You guys are 100% correct. The number one focus of the markets this week is going to be on the Federal Reserve meeting. But in many ways, we can say that the market completely discounted what the Federal Reserve is going to do this week. And we'll talk about that in a minute. For those of you that are new, I did a video on how to trade forex crosses. I posted on how to trade forex crosses. How to trade forex crosses, which I think is very, very valuable. So if you have not gotten a chance to watch that, please make sure you do, because it's really, really great. Okay, so speaking of this week, there are three big events that is on everyone's calendar. And these three big events, apologize for 1 second. These three big events, actually, I would say it's four big events. There's the Federal Reserve rate decision, which all of you were spot on. There is the Bank of Japan rate decision. And there's the Bank of England's rate decision. But aside from that, we also have a whole bunch of other stuff going on. You have U.S. retail sales report, which is coming out right before the Fed meeting. So that's going to be more market moving than usual. We have inflation data from the UK. We have GDP numbers from New Zealand. We have Canadian retail sales and inflation data. We have UK retail sales data. This is a big week. I mean, why is it such a big week? Part of the reason why it's such a big week is because this is the last major trading week before everyone kind of goes off. And a lot of the countries like to kind of crunch all of the big reports into this week. And then, everyone kind of closes their books for the rest of the month. And I think that's something to be very, very careful of, because we're going to have one last push, in my opinion, for this week. And then, Christmas Eve is on Tuesday of next week. So pretty much it's so close to the beginning of the week is what I'm trying to say, that everyone is pretty much going to square up their books. So I don't expect much in the way of meaningful moves in the last 2 weeks of the year. And I think any real opportunity we have to make money is just going to be this week. So with the Federal Reserve, the question is, first of all, the Federal Reserve is the only central bank that is expected to change interest rates. And take a wild guess, type in the chat. I love it when it's, interactive. How much do you think the market sees the Federal Reserve cutting interest rates this week? Or, do you think that they're going to hold? Let me know. Let me know whether you think, they're going to cut interest rates, whether you think they're going to hold. And while you do that, I'm going to share with you my screen. Hello, Sarvir from India. Okay, so you can see I got a lot of neutrals here. And the neutrals, and I'll go through each and every one of them. But the first thing I want to do is I want to show you this table here. This is the table that I build, and I build this for most of the rate decisions, the big ones at least. I built this table that shows you how the U.S. economy changed from the last Federal Reserve meeting. So we always just take a step back and we look at first glance. First glance, what does it look like? It looks like, I would say, just as much green as there's red. And it kind of looks like a little bit more green than a little bit more red, right? So looking at this, do you think the U.S. economy improved or weakened since the November meeting? If you think it improved since the November meeting, I'm going to drop this into the chat. If you think it improved, we are going to give it a rocket ship. Or you think it weakened, we are going to give it a thumbs down. And you can copy my emojis. Let me know which one, how do you feel looking at this? Do you think it was improved, the U.S. economy, or you think it weakened? Which one do you think, what do you think, how much change do you think happened in the U.S. economy since the last meeting in November? Don't be shy. There are no wrong answers. Sometimes when I give you these tests, there's a wrong answer, but there's no wrong answers on this one. Do you think the economy improved or weakened? All right, the answers are streaming in. I see some improved. I see some airplanes. I mean, yes, most of you are seeing what I'm seeing, which is that there are a little bit more green than there is red. And if we look at this in a little bit more detail, you can see that first off, retail sales, the top number, pretty much increased from the same amount in the previous month. Core retail sales was weaker, which is obviously not good. But Black Friday and Cyber Monday sales were record-breaking this year. So that tells us that consumers are still spending. And consumer confidence is strong. Both the University of Michigan index and the Conference Board index improved. The labor market, neutral. We had very strong job growth in terms of absolute numbers in November. But the market was a little, disappointed by it because the unemployment rate rose from 4.1 to 4.2. And average hourly earnings growth at 0.4 is actually pretty good, and same pace as the previous month. So I would even put the labor market. I know that when we live traded NFPs, the market interpreted it to be more negative than positive, but I don't think that this is a reflection of a weak labor market. The big problem for the Fed is inflation. Pretty much everything except for core PPI is stronger. So inflation is sticky. It's a problem. It's stronger. Housing market is mixed. Existing home sales are up. Pending home sales are up, but less than the previous month. New home sales, housing starts are a little weaker. I would say this is neutral bearish. And then manufacturing and service sector activity. Manufacturing activity is up, but still contracting. Service sector activity is expanding, but weaker. So where's the good points? Where's the problem points? The good points is retail sales isn't all that bad. And in my opinion, labor market's not that bad. Inflation is not that bad. The housing market and activity is pretty important. Activity, both of them are kind of weaker. So what does that mean? What does that mean for trading the Federal Reserve rate decision? Now, before we get to what it means for the Federal Reserve rate decision, one of the most important things to take stock of is what is priced in. So let's go to our trusty CME Fed Watch tool. So whenever you read in a news article, the market is pricing in X chance of a Fed rate cut or rate hike. Where they go to is the CME Fed Watch tool, and we just Googled it. All right, so this is the December meeting. Currently, rates are 4.5 to 4.75%. Market is pricing in only a 3% chance of no change. So if you think the Fed's going to hold, you are certainly, I mean, you still could be right, but you're certainly in the minority because the market is only pricing in a 3% chance of no change and a 97% chance. Yes, Quinali, a 97% chance of a 25 basis point rate cut. And if you add these together, they're basically, it's 100. So it's 0% chance of 50 basis points of easing. That is what the market is pricing in. It's pricing in 0% chance of 50 basis points of easing. So the market is pricing in a rate cut. Now, before I talk about how to trade it, which I will in a second, let's talk about what the, and I'm just going to go to my daily chart. Hold on. Let's talk about what is the price action in the markets. So we see euro under pressure, but rebounding a little bit. Dollar yen is going up for the 6th straight day in a row. Dollar Swiss is still strong. So the dollar, what's really interesting here and very important as well, is that the dollar is pretty much mostly up going into FOMC, even though the market is pricing in a 97% chance of a interest rate cut. So what does that mean? It means that even though the market thinks that the Federal Reserve is pretty much convinced that the Federal Reserve is going to cut interest rates by 25 basis points, they think that some of the other things that will accompany the Fed rate decision will be more positive, will be positive for the dollar and not negative. And so one of these questions we have before we get to that is D. Wales. Interest rate cut, does this mean the Fed is trying to boost the economy? So if the Fed is cutting interest rate, it does mean that they are trying to boost growth or prevent weaker growth from happening. So the most important thing to us as traders is not so much philosophically, what is priced in, how the economy is doing, what the Fed is doing. What we care about, traders, is what this means for trading and what it means for our trade. So this is one of those rate decisions where we have a whole bunch of stuff going on. We have number one, the rate change. Number two, the economic projections and the dot plot. If you know what the dot plot is, the Fed dot plot. Actually, if you do not know what the Fed dot plot is, give me some question marks and I will explain it. If you do not know what the Fed dot plot is, give me some question marks. But so with this Fed rate decision, there is the rate change, the economic projections, and the dot plot, and the guidance from the Fed. So what in the world is the dot plot? Let's look at this. Let's see what we got here. All right. So this is what we call the dot plot. And it's very confusing. Don't worry about it because the media will immediately tell you what this all means. But the dot plot, what it means, and I love that so many of you are giving me question marks because that really gives me an opportunity to explain all of this. The dot plot is basically what each individual Fed president, whether they're a voting member or a non-voting member, thinks interest rates should be in next year, the 2025, 2026, 2027. We really don't care about 2027 or longer run. We just care about 2025, 2026. So all you need to see is this cluster of dots. Are we going to move up? Are we going to move down? So you know that right now we are at 4.5% to 4.75%. So we're somewhere in the middle over here. So if these start to move up, that means that the market is pricing in slightly lower chance of more aggressive easing next year. If the dot plot goes down, it means that they expect more rate cuts. Now, what people really focus on are the blues. The blues are what we call the central tendency. The central tendency is what the average is. So this year, they thought the average was going to be just under 4.5, which is probably going to be the case. So when the Federal Reserve meets, I know this sounds very confusing, but they're going to talk a lot about the dot plot, and the dot plot will be very, very important. And with the dot plot, what they are going to say is that they're going to say the Fed expects, the dot plot either expects more or less interest rate cuts this year. And based upon whether they expect more or less interest rate cuts, that's what's going to move the dollar. So I know it sounds confusing, but if they say that the dot plot shows fewer rate cuts next year, that's going to be dollar positive. And that's going to, in many ways, matter more than the actual change by the Fed, because we all kind of know what the actual change by the Fed is going to be. So while we do know what the actual change by the Fed is going to be, probably 25 basis points, I mean, it would be a huge surprise if it was anything different from 25 basis points. We already know that's pretty much going to be 25 basis points, but are they expecting more or less interest rate cuts next year? That is really, really going to be the key. Because right now, the last time we got the dot plot, the market, and this is what you need to know, right now, it's all you need to remember. The market is pricing in, as of September, 100 basis points of easing in 2025. I'm typing that in. I'm hoping that it gets in there. Yes, the market is pricing in 125 basis points of easing in 2025. If this changes to 75 basis points, it's going to be dollar positive. The dollar is going to go up, stocks are going to go down. If it shows that it's still 100 basis points, it's probably going to be dollar negative, because it means that the market has not given up on its belief that the Fed needs to cut interest rates by 100 basis points next year. If it goes to 125, which I highly don't, no one's really looking for it to go to 125, then that's going to be very, very dollar negative. So when we have the Federal Reserve rate decision, we'll be looking at number one, what the central bank says they are, what the central bank does. Is it going to be 25 or nothing? Just give me 1 second. I am at the same time talking to you and registering my child for after school, because 9 o'clock is the opening time. All right. So anyway, what the central bank does, 25 or nothing. What the dot plot says, will it be 100? That's all you need to remember. When you read the headlines, the dot plot is pricing in still 100. That's going to be dollar negative. The dot plot is pricing in 75. That's going to be dollar positive. And then the last piece of the puzzle is going to be what the Fed chairman says. So what does the Fed chairman say? We know already that the Fed chairman thinks that, feels that the U.S. economy is doing better than everyone else, feels that the U.S. economy is outperforming, and that, no other economy is, is basically, I think he used the words envy of the world. So he definitely thinks that the U.S. economy is outperforming. So there's a very good chance that Powell is going to be, his language that he uses, the words that come out of his mouth are going to be more positive than negative. And okay, good. My son is fully registered for after school next year. All right. So they think his comments are going to be positive. So what is all the stuff that I'm trying to tell you? What all the stuff that I'm trying to tell you is that there's a very, very good chance. I just typed this in the chat so there's no confusion. There's a very, very good chance, because there's more, as many of you saw, there's more green, slightly more green than there is red. And, Powell is probably, he already told us that the U.S. economy is the envy of the world. There's a good chance that there could be a hawkish cut. And that hawkish cut, my friends, will largely hinge upon what I typed earlier, which is what the dot plot is showing us. 75 basis points of easing in 25 or 100 basis points of easing. So if we get a hawkish cut, what does that mean for trading? If we get a hawkish cut, that means that dollar yen could test. Dollar yen could test, could go to 155 and maybe even the 155.50. dollar Swiss could easily retest these levels. And so there's and euro dollar, there's a very good chance. Euro, someone asked me to talk about euros, which I will in a second. Euro has a whole bunch of problems. And so there's a very good chance that euro could drop at least to 104.50, maybe even go lower. Now, I feel really good about the idea of a hawkish cut. But I will be the first to tell you that I don't necessarily feel as good about a dollar rally. And the reason for that is because, dollar has had a really good year. And, the dollar in general has been fairly strong. And the euro has been very weak. Aussie has been very weak. A lot of these currencies have moved, and CAD has been very, very weak. There could be year-end profit taking. So maybe we'll have the dollar rally this week off of the hawkish cut. But there's also a very good chance that the last 2 weeks of the year, even though trading will grind to a halt, and there's no major data that's really going to be reported for the rest of the year, there is a good chance that we could see profit taking. And we could see the dollar, traders just start to unwind those dollar long positions. And towards the end of the year, there's a possibility that we could actually see a bit of a decline as a result. So be careful. My point is knee-jerk reaction. I think the dollar is going to rise, and maybe we'll have 24 hours of continuation after that. I also think that U.S. retail sales are going to be stronger because Black Friday sales were so good. But after that, we could see some profit taking. So I would just be a little bit careful of that. So right now I'm dollar neutral, but I'm neutral bullish, actually. I'm neutral simply because, we've got, it's a big event this week, and we've got retail sales, and we've got FOMC, and those could very much be game changers. But I'm actually neutral bullish. Now, we have another rate decision, the Bank of England rate decision. The Bank of England rate decision, you can see here that, what does this look like to you? More red, more green? What do you think? I'm going to give you this opportunity to let me know whether you see more red, more green. What does it look like to you? All right. In my opinion, it looks like there are just as much red as there's more red than there's green. And that is true. Yeah. And you guys are doing a really, really good job of putting yourself into the shoes of the central bank and thinking like the central bank. And yes, there's more red than there's more green. The economy, there's no question, has worsened since last month. We had the PMI numbers this morning. It was kind of mixed, but still, weaker than the previous month. The Bank of England should cut interest rates, right? They should really cut interest rates this week. But the market is not pricing in a interest rate cut. The market thinks that the Bank of England is going to do nothing. I think there's a risk of a rate cut. Now, the argument for why they will not cut interest rates is because of the fact that they have a huge stimulus package next year. So they have a huge stimulus package, and this huge stimulus package is expected to drive up inflation, and inflation is a problem. Look at this. Even though I said that there's more red and there's more green, inflation, which is the number one focus of many of these central banks, like the Bank of England, the Bank of Canada, the European Central Bank, the main thing they worry about is inflation. And inflation is, still pretty high, and it jumped a lot. I mean, 1.7 to 2.3 in October. That's a really big jump. And if you think about it, if they're going to deliver a major fiscal stimulus package next year that's going to boost growth, boost inflation, that these numbers are going to rise even more. So that is the main argument that people are giving for why the central bank may not cut interest rates. I think there's a small chance that they could cut interest rates. I think that even if they do not cut interest rates, unlike the Fed, who is expected to do a hawkish cut, I'm going to write this down. The BOE, I think, is going to be a dovish hold. All right, let's add this to my little chat box. I think the BOE is going to be a dovish hold. So I think they're going to keep interest rates unchanged, and there's a possibility that they could cut interest rates, but the market is pricing in aggressive easing next year. Okay, let me remove this so you can't hide. The last is 10-year bond yields, James. There's a good chance the market's pricing 100 basis points of easing by the Bank of England next year. And so there's a good chance that they're going to signal that. So while Fed Chairman Powell could signal fewer rate cuts next year, the Bank of England could signal more rate cuts next year. Now, so with sterling, if we look at sterling is up today because we have mixed PMI. Sterling is still mostly weaker all around. You can see that, we started the year over here. It's actually pretty much at the year unchanged. So there's more room to go to the downside. I think the UK has a lot of problems that it could see in the coming year. And so I'm more bearish than bullish pounds. And so I think this number is to the downside. The last central bank is the Bank of Japan. And I'll admit, I was a little lazy. I didn't build the Japan table because I got busy this weekend. But there's some interesting things going on. You see from the price action, the yen. First of all, on my right-hand side, you see dollar yen's up, euro yen's up, Swiss yen's up, Aussie yen's up, Kiwi yen's up, CAD yen's up. All of it is, all of the yen pairs are up, which means that the Japanese yen is weaker. So the Japanese yen is weaker because the market, as you can see here, just like the market is pricing in something that's a little positive for the dollar, they are pricing in something that is negative for the Japanese yen. They are pricing in no rate hike from the Bank of Japan this year. So even though the BOJ has suggested that that December is a live meeting, the market does not expect the BOJ to hike. Now, there are arguments for why the main argument is that inflation, actually there are arguments for why they could hike. Number one, they could hike because the yen is obviously very weak. And so they could certainly hike. Hold on. I'm just looking up something. They could certainly hike because the yen is very weak and they need to stop it from falling. They could also hike because inflation has been a little hotter than expected. And they could also hike because because the economy is improving. It's not improving as much as the market may be hoping for, but it has been improving. The main reason why people argue that they may not hike interest rates is because of the Trump administration and the potential tariffs and how they may be worried about the tariffs and the implications for it. Honestly, in my opinion, it is a little bit hard to tell. The main thing is to be prepared. So let's remove our moving averages. Let's look at July. July 31st was when the BOJ, is this July 31st? Surprised the market with a interest rate hike. So let's look first on the 1 hour basis. Because, we're traders. We like to, let me see if I can get my charts to go all the way back to July. I'm pretty sure I can. Oh, there it goes. There's my arrow. July 31st was when we had the rate decision. Usually comes out right here at 1 a.m. So I'm pretty certain that this arrow is way too long. So we are looking at the Bank of Japan interest rate hike, the first one in decades. So I'm going to label this first Japan hike in decades. All right. That's what we're looking at right over there. So I only have a 1 hour chart, so we can't really look at it on a 15-minute basis. But this 1 hour candle is 250 pips. So this candle right here is 250 pips. 250 pips. So there was a lot of volatility for that day. What we saw was the yen dropped and it popped up. Let me add the word pips. Which happens. Sometimes, you have the hike, the market expected it, it dropped, and then there's kind of a retracement. This is what you have to be really, really careful of. This is why, and probably I hope this is the most important comment that I make to you. I always trade rate decisions reactively. Because look at this, 250 pips of volatility. I don't think most of us could withstand 250 pips of a news stop. It is much better to wait for the dust to settle and to get in, because we have the rate decision and then we have the comments from the Japanese government that comes out later. So this is 11 p.m. New York time. This is midnight. And usually the rate decision comes out after this. So there's a couple ways to trade this. The first way is this was the news candle. Let me zoom in. This was the news candle low. The first way to trade this is you can wait for, I would recommend there's only two real ways to trade this. The first one is to wait for the news candle high or low to be broken after the Bank of Japan in a meaningful way. And so it did break it a little bit over here, but we're still before the Bank of Japan governor speaks. So, wait, give it some time, let the dust settle, finally breaks to the downside. When it breaks to the downside, you can see, even if you sold, let's say 40 pips below this, which I think is a meaningful break, even 30 pips. So let's say you sold, the low was 150.160. Let's say you sold 30 pips, 150.130. This thing went all the way, this low here, almost 200 pips. So basically 170 pips. So from this time here, if you were one of my European traders, from 3 a.m. all the way to 10 a.m., it sold off 170 pips. But that's not the way I'm going to be trading. I am not up at 3 a.m. I will be up at 6 a.m. and I will be trading over here, which, is unfortunate because a bit of the move has happened, but that's okay. Zip, my strategy works because it is based on the premise that there's continuation in the early New York hours from 6:30 a.m. New York time until the New York Open. So 6 a.m. Let's just imagine 6 a.m. It's closing at 150.50. Very, very little retracement. So if we sold, it would never went up against us. And it went down, even if we stopped here, 9 a.m., it went down to a low of 149.82. So we would have sold 150.50, not a huge move, 149.82, but that is still 70 points of movement. A little bit more if we counted these, but 70 points of easy continuation movement. And this should be, because it's the first BOJ hike in a while, it should be a swing trade. It should be a swing trade that has legs, that has continuation, because it is a pretty big announcement. So even if we didn't catch the initial move and we caught this move here, that was 60 pips. Or we wait till the Asia Open, which is over here. Sorry. We catch the Asia Open. This is 149.44. Looks like that's not a big candle, but the low is 148.51. So that's 90 pips of movement. So this one would have been about 60 pips that we would have gotten, which is not bad. And this one at the Asia Open would have been 90 pips. And if you took a swing trade, it would have been more. If so, basically, you could have either been one of my European traders that are awake at 3 a.m. and you could have sold the break of this news candle for more, or you could wait in the New York session when I wake up, or you could wait the following Asia session. So this is the game plan for this BOJ. If they do nothing, then there's no trade because that's completely been discounted the market. If they do not raise interest rates, there's no trade. But if they do surprise the market with a rate hike, and there's a possibility that they could, the good possibility, that is how you trade it. So, Joe, if the Bank of Japan raises interest rates, and I'm going to write this out, okay? If we get a surprise BOJ hike, then you want to sell dollar yen because you're selling dollars and buying the Japanese yen because it is positive for the Japanese yen. Now, the BOJ rate decision comes after the Federal Reserve rate decision, so we kind of got to figure out what the Fed does. Maybe the better opportunity will be in euro yen, for example, but yeah, dollar yen's going to move either way. So hopefully that answers your question. Okay, so we went through the 3 central bank rate decisions: dollar, UK, Japan. Now, some of you asked about euro. Euro's got its whole host of its own problems. Where's my daily chart? Okay, let's get rid of these lines. So this morning we had PMIs, and euro is rose a little bit off the PMIs because the PMIs were kind of mixed. This is the PMI. Flash PMI was stronger. Manufacturing PMI was unchanged. So it was actually, I would say slightly better. But, they've got a whole host of political problems. Germany is expected to, Germany faces a no confidence vote tomorrow that they're expected to fail. And when they fail, if and when they fail, the no confidence vote tomorrow, that should lead to elections in February. So euro is probably going to remain weak and will probably sell off a little further if Germany fails its no confidence vote, which its confidence vote, which is widely expected to. Also, Moody's over the weekend or late last week cut France's government rating, sovereign debt rating, so lowered France's rating. So that's also bearish for the euro. We already had the main important event risk for euro, which is the PMIs released this morning. Tomorrow, we have IFO and ZOO. They're expected to come in a little bit better. So we could get a little bit of a dead cat bounce, but because of the political troubles, I'm not very optimistic. I think that euro is not going to see, maybe we'll get a little bit of a rally back towards the 20 SMA, but then it's just going to halt before U.S. retail sales, which should be stronger, and then also the Fed report. So I think the risk is ultimately to the downside because fundamentals and the economy and the political landscape for euro is bearish. And then if the U.S. retail sales report comes in strong, that's probably going to drive up expectations for a hawkish cut from the Fed on Wednesday. Aussie neutral. Aussie is so deeply oversold. I mean, this is the weakest level we have seen in the Australian dollar since at least pretty much August, but if you discount, it's pretty much at the August low, so it's the weakest since November. And this morning's PMIs were not good, and that is why Aussie continues to remain under pressure. Yes, the Australian jobs report was great, but the RBA has admitted inflation is starting to move to their forecast. They're pretty much maybe ready to move away from talking about raising interest rates, and so now they're thinking about when to cut interest rates next year. And so the market is driving Aussie down because of that. The Australian dollar is also seen as the proxy for China. And with Chinese data kind of mixed, and then also China, obviously facing tariffs, all of that is making the market nervous about the Australian dollar. By the way, totally off topic. How many of you actually think that TikTok is going to be banned in the US permanently? I find this so fascinating. TikTok is so widely used. I'm a little skeptical about whether whether it's really going to disappear for Americans, but I would love to hear your thoughts on this too. So if you got any thoughts, to share on that, I would love to hear that. Anyway, Aussie is weak and China is weak, and there's threat of tariffs, and that is why the Australian dollar. But what could happen? Maybe Boris can shed some light to. I agree. Too big to fail. No way. It's not going everywhere. They're saying that maybe it's going to remain in the App Store, maybe it will remain on the phones of Americans, but you can't get updates, and maybe it'll disappear eventually. So does that mean that Americans are just going to be using the same one forever? I don't know. What are we up to? Okay. Canadian dollar. So, Canadian dollar is very, very weak. Probably one of the weakest currencies this year. The Canadian dollar is trading at its weakest level since the pandemic. And we are ready. The next resistance level is here at 143. And it looks like it's no stopping until 143. And so it's the weakest level that we have seen the Canadian dollar since the pandemic. Bank of Canada cut interest rates by 50 basis points last week. Data has not been that terrible. The jobs report was really strong. This week, we have inflation and retail sales numbers. The Bank of Canada is already taking interest rates quite low. And with the inflation, the retail sales numbers, because jobs report was good, because we saw a rise in the price component of IV PMI, those numbers could be better. And dollar CAD is desperate for a correction, in my opinion. Now, we never want to fade this until it actually shows exhaustion. And you're looking at my zip chart right now. I will not be selling dollar CAD until we get a close below the indicator line. And we have not seen a close of below an indicator line in some time. And so having indicators like this to help you basically helps you see where you should potentially, that it keeps you from trying to pick a top when it's not ready for a top yet. So with dollar CAD, it's not ready for a top yet. I need to see, but when we close below the indicator line, and the indicator line will move up as dollar CAD moves up, there's going to be a very, very deep correction, in my opinion. There could be a very, very deep correction. By the way, you still have a little bit of opportunity. We have not picked a winner yet for our 12 days of trading for a lifetime access to ZIP. So we haven't picked a winner yet for our lifetime access to ZIP. So if you have not registered for our contest, make sure you do, because you could actually win lifetime access to ZIP. So back to here. I'm still bearish Canadian dollars, but I think that a deep correction in dollar CAD is coming. New Zealand dollar, I'm still bearish, but we had stronger PMIs this morning. The manufacturing PMIs last week was weak. The service sector PMI this morning was stronger. So I think that let's look at Kiwi on a technical basis. Kiwi is strong, is bouncing today, is stronger than Aussie. And it's showing like a little bit signs of bottom, but still, RBNZ is still in rate cut mode. And so I think there's still more scope to the downside. But Aussie Kiwi definitely looks like it could move lower, in my opinion. And I like this trade quite a bit in the near term. We're in the sell zone. The background's red. The currency pair is below the indicator line. And it looks really good on a daily basis as well. These are reversal candles. So I think Aussie Kiwi could move down quite a bit. And then, where am I up to? The Swiss franc. So I'm bearish Swiss francs. I'm bearish Swiss francs because we had data from Switzerland this morning. What was it? It was Swiss PPI. Swiss data has been terrible, and inflation numbers continue to be weak. So the Swiss franc is basically, lower against most of the major currencies. I think dollar Swiss will continue to rally. And Euro Swiss, Euro Swiss is deeply oversold. I think that is due. I think this is the most likely one that's due for a more stronger recovery. And then last but not least, I'm leaving this bullish simply because there's more risk to the upside than to the downside. I don't want, I think that if we get a surprise interest rate hike from the Bank of Japan, even though I don't, there's a greater chance that they're going to remain on hold than hike, you need to be prepared. And if you're just joining us, I laid out the whole game plan for if the Bank of Japan hikes interest rates. Make sure you watch that because that's going to be very, very important. All right. Questions. Very good question from VDAC. Aussie has a big option expiration at 63.50, which is right where we're at. What does this mean? This means that usually option expirations happen around the close of the London session, which is around 12 p.m. New York time, 11 a.m. or 12 p.m. When there's a big option expiration happening, what ends up happening is that there's a lot of tug of war around that price level because certain people want that level to be tested. Certain people, the banks who maybe have to pay out a lot of money if it's broken on a closing basis, will do everything in their power to make sure it doesn't break before option expiration time. And at the same time, the people who have the option, who own the options, who are probably big funds, will do everything in their power to make sure that it actually breaks. And so there's a lot of tug of war around that level. And when the option expires, it's kind of like relief. The floodgates are open. No one's there, at the stop sign. And so it allows for more movement in one direction or another. So hopefully that answers your questions. Any other questions? The ZIP indicator is a proprietary indicator, Billy. Do I use the COT? I don't really use it that much. There are a lot of people who do use it, but personally, I don't use it all that much. Where did you get the option expiration information? VDAC is going to be our MVP this week. VDAC, can you share where you got this option expiration information? Usually, and I'm going to let him speak. I'm going to let him see if he can tell us. But in the meantime, let me see if I can find from where. Usually, Forex Live will share option expiration information. I don't know if they did this time. Oh, thank you. Him and I are on the same page. VDAC is our MVP, Forex Live. That is where we usually get our option expiration information. And I encourage you all, Forex Live are good friends of ours. And, I definitely don't tweet as much as they tweet. They're much more, in sync with, everything that's happening and tweeting very often. And so, yes, read the articles. Forex Live is where option expiration is. Thank you. Let's give VDAC some claps, VDAC is our MVP this week. I always love it when our attendees help each other. And let me get my trophy going on here. Because, that's what we're all here for. And, every week, a lot of you guys have, given us information that we can use to help each other. Thank you, Blue Editing. I think Bloomberg, though, you have to pay for that, whereas Forex Live is free. I love it when we help each other. Okay, I'm going to leave you with Bitcoin. Bitcoin, we've been talking about how Bitcoin was going to surge. It, went as high as 106,000 this morning. Bitcoin is going to the moon, in my opinion, at least to 115. That's where we extrapolated when gold was added to the reserves and when it was talked about to the reserves. I think that crypto, we've got a pro-crypto president that is coming in who's stacking his administration with a lot of crypto supporters. So, it's going to happen. I think we're going to see a lot more crypto adoption in the next 4 years. And that Bitcoin and all the other major, but Bitcoin, maybe Ethereum and Tether are going to be much more widely used in the US. And that's going to drive Bitcoin even higher. So yes, buying on dips for crypto is really what we want to do. But thank you, VDAC, our MVP for this week. And yeah, so don't be shy to share your ideas, because every single week we've had that members share valuable information with me, with each other, and that's what all makes us a better trader. So Boris is here with us. Hello, Boris.
Hi guys. How's
We're
everybody
gonna
doing?
roll into live trading with Boris. So I'll let him take it away. Thank you, everyone.
Thanks, Kay. Thank you very much. Give me just a second. We're going to set up my screens here. Just 1 second. And set up my stuff. Just 1 second. I just got to grab the window.
Who's actually trading Bitcoin here? If you're trading Bitcoin, give me a thumbs up and tell me where you are from. What country do you live in? Like Sweetwater. Are you American, European, Asian? Thank you, VDAC. Okay, FC is not trading Bitcoin. Where do you live, Sweetwater? US. How are you trading Bitcoin? What platform are you using? Let us know. We've got plenty of Americans who struggle to find platforms to trade Bitcoin. So maybe you could be our MVP today as well, and you can share with us.
Blue says
editing.
Blue
Long
says, yeah,
bit
long
of Bitcoin, living in Singapore. Okay.
Nice.
Sweetwater, where are you? What platform do you use? Oh, that pizza looks really good.
I know, right? I love Sweetwater.
Yeah.
He's got the best emoji. What do you call it?
Okay, Luno. GUI trade. I have no idea what GUI trade is.
Oh, look at
And
this.
you know what?
Okay, I didn't even. Well, hold on a second. I didn't even pay him, and look what he says. Tried some Boris scalping, did well. Stephen Denby, thanks, Stephen. We're gonna get a lot more. I'm actually gonna make it even easier for everybody to scalp with me today. But thank you, Stephen, for the comment. Trading BTC futures. Somebody's offended. Yeah. So if you're in the U.S., I think Coinbase probably is the most. Actually, Robinhood also allows you to trade Bitcoin.
But it's not really, it's not really like CFDs. CFD Bitcoin trading is amazing. You buy, sell, so easily.
No,
and
correct.
I hate that, and hopefully that'll change. I mean, clearly we Americans need something easier to trade crypto. Maybe that will come from the Trump administration.
Maybe we'll get crypto, Bitcoin exchange, just crypto exchanges in the U.S. that are fully regulated that will allow like nice, clean, easy onboarding, and that'll be good. Blue says he's trading Coinbase from Singapore as well. Yeah.
All right. Sounds great. So I will leave you all with Boris. Thank you so much for joining me today. And hopefully, it was a valuable session for me. Hopefully it was for you as well.
Yeah. Thank you, Kay. Really, really great session. Just the last week of really, really heavy duty data. After this, we're obviously going to take off much less trading after this week. Let me just change. Hang on a second. I'm going to go to here, give you guys a lot more space to look at stuff. And Kay. Oh, okay. Bye, Kay. I guess Kay left us. Okay. So we will say goodbye to Kathy. Everybody's good. Everybody hears me well. Sound is good, right? Screens are good. Let's go to single screen for just 1 second. Let me organize this myself. Let me get a little bit bigger. You can see I did a little bit of scalping while Kay was talking. All right. So, sorry. Let me just. So everybody, give me just hey, say hey in the comments. GUI is best because. Okay. Tell me you guys seeing screen well. Everything is nice and clean and clear. All good, right? All right. Hey. Thank you so much. Thank you so much, guys. Welcome. All right. We really got basically like the last real week. As I'm looking at this, I should probably take this trade. All right. I'm always, vacillating between whether I should start trading or start talking. Okay. We're going to start talking. We're not going to trade for 5 minutes because I want to just start talking first and kind of explain to you what you're looking at. This is my BFF scalper 2.05 version, which I created over the weekend after a long consultation with all the BK members, that I think does two things really well. It simplifies all the signals to the point I would think of just pure intuitive understanding. At the same time, it gives you incredible granularity to configure the trading that you want it to be in the most sophisticated manner. So many of you are new here. Many of you have no idea what this is. Let me describe it to you in the simplest possible manner. The red line is a 200 period SMA. The blue line is the 8 period SMA. We are going to just look at this from a trend point of view right now, and then eventually I'll explain to you the more sophisticated counter trend point of view trading. So we're going to scalp with trend. What that means is, as you're looking at this, what that means is that we're only going to be buying when the blue is above the red. And one of the things that you're seeing over here is that there's only buy signals. We are in trend mode, and there's only buy signals in this chart. Now, I've gone one step further, which I think is going to just makes it so much easier to perceive the whole trend idea. I have blacked out all the red candles, right? So all you see in an uptrend is either green candles and blacked out candles, not red candles. And the reason why I've done that is to both emotionally and kind of, visually dissuade you from thinking short. Now, you can still see that this is a corrective trend. Like this is, obviously we're in a downtrend on the 8 here. These, you can still see the red splotches, which are corrective moves above the big trend, right? So it's not like you don't know that there's a negative trend going on. But visually, what this does is it creates a pure forest of green on the upside, and it's going to create a pure forest of red on the downside, because I've done the same thing to, on below it. Once it goes below, you're not going to see any green candles. You're just going to see red candles with red signals. This makes it so much more intuitive to basically understand when I'm in this space, I want to be looking for buys. And when I'm below space, I want to be looking for sells, right? Now, because the scalper is so sophisticated, it can actually look for sells or buys, trend trades, in two different ways. There is the momentum mode. I'm going to just light it up. So in the indicator here, in the settings over here, it's called continuity mode, which is momentum mode, right? And when you put it in that mode, let me just get rid of the reversal mode. You will see that all the green signals are breakouts. They're above the candle. And this is, the momentum mode is always about, buying the breakout, buying the breakout, buying the breakout, buying the breakout, right? And if I hide that and bring in the reversal mode, the retrace mode is always buying the dip. So depending on what kind of a trader you are, if you're a momentum trader, you always want to be buying breakouts and you just want to look at breakout signals. If you're a retrace trader, as I am, and this is very, very important to know what kind of a trader you are personality-wise, then you just simply look for retrace signals in trend, right? It's not a right way or wrong way of doing it. It's just simply a way that's going to optimize your ability to succeed, because the signal itself is just the starting point of our whole production, okay? So those are the trend ideas in the space. Now, if you get more sophisticated, right? And by the way, everything is in a template, so you don't have to get any more sophisticated if you don't want to. But if you get more sophisticated, there is a filter here that says if trend, meaning that the blue 8-period SMA is so far above the green, the red SMA, meaning that it's really, really stretched far above. In this case, I'm using 20 basis points as my filter. 20 basis points is about 1/100 to 1, about 1/5 to 1%. So if this thing is so far above the red that it's about 1/5 to 1% of the whole underlying, right? It's really, really stretched out. don't show me any more trend signals. Don't show me any more trend signals. Now, you don't want to, if you want to see more trend signals, you can change that to 100. You can change it to 1% wide. It's up to you. I've set it as a default because I think this is a very prudent way of making sure that you're not chasing the top or selling the bottom when things are extended. The only thing that matters when you're trading trend is to buy when moving averages are starting to separate, and make sure you don't buy too high when they're so far ahead of each other. When conditions are really overbought or oversold, you're not chasing price, and that you're just coming in at price at value as much as possible, right? You can see that I came in at price at value here at the moving average. Moving average were tight. This was a 200-period SMA. I bought it over here. Boom. That was a nice clean trade. I could have bought it over here. As I was talking to you guys, I just said, I'm not going to trade because I want to explain everything to you. But there was another great opportunity here. So the point being is, the system that we have tries to put you in the first trade as high probability as possible, okay? As high probability as possible. Now, that doesn't mean it works. So we always have plan B, plan C, plan D, plan E, and plan F. We go all the way down the alphabet to trade, okay? We don't stop at plan B or plan C. That is how I'm able to stay so consistent in my trading. This is my trading for the last 2 weeks of December, right? Last 2 weeks of mid-December. You can see that I'm staying very, very consistent. I will never be the guy that does $5,000 a day, but I will also never be the guy that loses $5,000 a day. And I'm the guy, if you're interested in making consistent profits every day, if you want to be everyday green, if that's my goal, that's what I try and do. And to do that, you have to have plan B, plan C, plan D, plan E behind it. And what does that mean? That simply means this is going to be my final thing, and then we'll get into trading. What that means is, let me just pull this up. Let's see if you guys are actually able to see this on the screen. Hopefully you do. Give me just 1 second. Yes. Okay. So this is my Trade-Of-8 account, this is the engine that's running all my trades underneath, right? And what I'm basically doing is, first of all, I'm trading gold, S&P, NASDAQ. This is the micro contracts. I'm always starting with very, very small size on the micro size, right? And then if I get stopped out, and I have to increase my size at plan B and plan C and plan D, increase my size in order to turn the whole trade cycle positive, I will eventually move over to the mini contracts, mini gold, mini S&P, mini NASDAQ. By the way, everybody should know that we have rolled. Rolling means that we're now trading the March contract today. How do you know when you roll? When is the forward contract? Very, very simple. You go to the Chicago Mercantile Exchange website and you pull up whatever contract you want. So, for example, gold, the front month contract is February. It's GCG5. If you go to S&P, right, which would be ES, right, and we're going to go like this. And, oops, sorry. Hang on. What did I just do? Where's the quotes? Hang on. Sorry. Let me just do this again. ES. And you want to see futures quotes, right? And you click this side. It will tell you right over here, ESH5. This is the March contract. It will always show you the proper active contract on the Chicago Mercantile Exchange, so you know when to change. But the rule of thumb is it's the first Monday of the Thursday. This Thursday, all December data expires, so everybody is rolled over to Monday. So what I'm doing is I'm inventory managing, trading exactly like a market maker would in terms of my position. If my first position goes wrong, I'm going to double up on the micro sizes for the next level and the next level. And then if that goes wrong, I'm going to switch over to the minis. Basically, I'm going to give myself 6 chances to resolve. And if I'm doing a good job, I usually should be able to resolve within 1 or 2 chances. Between plan B, plan C is the maximum I need to go to resolve my trades. But sometimes you're going to get caught, and you have to stick to your process and stick to your game plan to be able to resolve these trades accurately. That's how you stay consistent. That's how you stay green. So there's a lot of moving parts to how I scalp, which is why it's really valuable to come and hang out with me every single day. because the more you hang with me, the more it becomes intuitive. The more you see me do this all day long, the easier it becomes for you to kind of comprehend what I'm doing. So that's 95% of what I've done. I'm going to not do the counter trend trades with you today. Maybe we'll talk about counter trend trades tomorrow because I've given you so much information today. But that's basically the updated version of the BFF. And let me see if there's any can all the indicators. Can I use all indicators at once? Zip and scalper? No, they're completely. The zip and scalper are as different as Kathy and I. You know, like you would never say we're the same person, right? You should never use the same. You don't mix and match, my friend. Okay. Zip is for forex and for longer term macro trades. Scalper is for indices, gold, Bitcoin, all the fast trades, and it's done on a 1 minute chart versus a 1 hour chart. So do not mix and match is my answer to you. Okay. Excuse me. Let me go to new comments. Just 1 sec. Okay. Okay. So first of all, any questions on the new version of BFF? I think it's very, very intuitive. What you are watching it right now is in my preferred mode, the retrace mode. So I'm going to be looking to buy the dips on the upside in the S&P. This is the S&P, right? Looking to buy the dips. Waiting for the numbers to come in. How's NASDAQ looking? NASDAQ also looking positive right now. Still, NASDAQ is positive. See, I could have bought the dips here, bought the dips here. Lots of dip buying opportunities here. Now, look what's going to happen here. Moving average is going to 20 wide. The moving averages are getting a little too wide. That means I'm no longer going to get any more buy signals. Now, you could, trade buy signals all you want if you're a chaser. I am not a chaser. At this point, there is no signals for me because this is too much risk for me to bear. If I buy here and it drops all the way to the 200 period SMA, that's a lot of area I've got to be able to cover in order to resolve the trade. So I don't chase it when it gets up to about 20 or wider on my trades, right? Here's gold. Now gold is interesting because gold now is negative. Gold is negative bid. So gold is actually a sell. And you can see now, by the way, you see how clean this is? All you see is sell signals. Your vision is not polluted by any green candles. It makes it, I think, much more intuitive to understand what it is that you want to do, right? Gold also entering pretty close to 20 basis point territory where there's most of the opportunities are gone. So there was a lot of opportunities here, those opportunities here, those opportunities here to trade gold. I just wanted to spend the first couple of minutes explaining this to you, and it's impossible to trade and explain. So because you need to focus on one or the other. So hopefully you guys really like this. If we don't get any trades off today, there's always tomorrow. Always remember, by the way, that not only do I trade with you guys in futures here and with my good friends at Apex. Let me make sure that we put those up there. Hang on a second. They have like a 80% off discount. Let me make sure I put the 80% off discount. Oh, hang on. You know what? Let me just edit this. This is still in place. So absolutely use the the code here. Let me send you the link. Hey guys, I blew myself out for some reason. Just hang with me. I gotta show everything over here. Just 1 second. Bear with me 1 sec. I blew literally like I hit some kind of a Oh my God. Wow. That was really wild. I just literally blew myself out of the, okay. We're back in business. Guys, everybody sees my screen? All good? Give me a yes, please. Okay, sorry. I literally blew myself out of the room, hitting a series of keystroke keys, which must have just blew up my. Wow, it was just really really wild. That was really wild. Hang on a second. I need to readjust everything in the back end here to make sure that I'm in good standing here. Okay, so okay. So what's really cool is if we're looking at NASDAQ, right now, NASDAQ is running like almost 30 basis points high above here. And pretty soon it's going to start giving me a counter trend sell signal. Now I'm just going to basically play here. Let me see if I can get this done. I'm gonna play around and sell NASDAQ right now off this move, because I think it's a little bit overbought. This is the cowboy trade. Do not do this if you're not fully willing to go toe to toe with NASDAQ right now. But where is it? 16, 17 seconds. Hang on a second. Do I want to resolve this? Okay, I want to resolve. Okay, I covered it up because so this is my own little thing. Do not do this if you, one, don't like to counter trade, two, don't like to assume a shitload of risk and be willing to stand in front of an oncoming train, and three, don't have ample ammunition at your withdrawal. I'm trading a $250,000 account, so I can throw money at it for quite a long time to beat to beat NASDAQ into oblivion. If you're trading a small account, you don't have the ammunition to do the fight. So don't ever do counter trend trades unless you have all those things in your hand. But the reason why I did this counter trend trade is because my indicator is super great. It's telling me, okay, 30 basis points high. It's really, really overbought. This whole candle is well above the 8-period SMA. So it's stretched out not only above the big moving average, but the little moving average. It's really, really overstretched. It's above that 250, 260 zone, which is a good level zone. Hell yes. Will I short the shit out of this thing? I'll take it. That was a quick, 10 points my way. That totally worked. So, okay, let me, this is a good question by John Nelson. He's saying, just to clarify, your trade's a straight up buy and sell, correct? This is versus the currency pairs. I'm still learning. We don't trade. Oh, and here's my sell reversal signal. Okay, you see how I have a sell reversal signal over here, right over here? Let's do this. Hang on a second. All right, sell market. All right, we're in at 57. Shit. I'm too large a size. I bought too large a size, so we're gonna have to try to fight this. Okay, I'm gonna get out of this trade. Sorry, I had to get out of this trade because I started my size at 2. I wanted to start my size at 1. The single most important thing I do in terms of managing is always trade proper size. So I actually have some size here, and I can sell market at 1. Okay, I'm at 60, and now we're gonna go 2. And I'm going to set myself up I'm at 60.75, so I want to put 70.50 at 2. So here's what I'm doing for you to understand it. Plan A is I'm short at 60. If this thing verticalizes and stops me out at 70, plan B is I'm already going to short at 70, twice the size. Not only am I going to short at 70, but I'm going to short 1 tick before my stop out, to absolutely 1000% make sure that if I get stopped out, I'm going to be put into a trade at twice the size before. So here I am. So now I'm in the second position. Now we're going to go to third position. So we're in at 22.70.50. Now I'm going to go to 80.25 at 4. So now is my backup plan here. But as you can see over here, I'm almost at PNL here. I'm almost at PNL. Shit, I'm not. It's really, really fast moving stuff. So didn't quite make the P&L here. Now we're going to go to level 4. Now I'm probably going to get stopped out of this. And if I get taken out at level 4, the next move I'm going to go to will be the one, the large contract. If this level 4 contracts, okay. So now I'm short 4 contracts, and now 2085, and now I'm going to go to my large contract and 9085. I want to lay myself out at 9085. No, is it 8025? So it'd be just 90. Just simple 1 at 90. Okay. However, may not. This is my obviously my plan D. Plan D may not come into play because hopefully this whole trade resolves to the downside. We'll see. We'll give it a shot. 70.25 is my take profit here on this trade. Let's see if this if this comes in to my position. If not, then I'm going to be on the large contract. So I'm fighting this huge breakout move in NASDAQ. It's 32 basis points wide. It's kind of really verticalized against me. It may go all the way to 300. I'm there. I'm willing to fight it. But let's just see how this plays out. Watching the price action, I'm just focusing on that for right now. I'll answer your questions in a minute. Plan A didn't work. Plan B didn't work. Plan C is in play, and Plan D is my backup plan right now. So if I get tagged out, it'll be my backup plan. Oh no, sorry. I'm at plan. No, that's right. Yeah, I'm at plan C right now. I already forgot where I'm at. You see, they're really there's really a lot of battle here going on here. Huge amount of squeeze, and now they're going to try to liquidate. Let's see if they can bring me down to 70.25. I'm just trying to make this as big as possible for you guys to see. I don't wait for the sell signal to close before I short the reversals. I'm jumping in. My style is to just get in front of this thing, get the best possible prices until about 3 or 4 sequences. And if 3 or 4, if like by plan D, it's not working, then I may pause. And start looking for an actual, sell red candle before I enter my plan E, plan F, kind of, space myself out. Because obviously it's just, momentum is so strong that you kind of just want to wait for momentum to cool off a little bit. But generally, there's always a trade-off between taking the risk and getting a great price, or having confirmation and not getting the great price. And I'm willing to take the risk because I hopefully have the ammunition. All right, so my target is 70.25. Right, let's see if we can come down here a little bit. Fast markets, lots of movement here. Bulls still fighting the move here. But we're done, and now I'm net positive on the whole trade. Now, very important, the next step is to make sure that I erase all the positions. Oh, shit, exit, fuck. Ah! Fuck, all right, that was unnecessary. Shit. Ah! Sorry, that was I didn't lose any money on this, but it was just an unnecessary trade. Because I'm talking and every fucking time I say this, I cannot talk and trade at the same time. I gotta just trade, then I'll talk. All right. Anyways, doesn't matter. You guys saw plan A, plan B, plan C got resolved, right? The most important thing is you guys see all this stuff in real time get resolved. Because when I trade by myself, obviously I'm a lot more focused on what I'm doing instead of what I'm talking. But this gives you a really clean idea of how I stay green. I'm net positive today, net positive Friday, net positive Thursday. Today, not a brilliant day so far because not a lot of opportunities for me. It's Monday. There's a lot more trade to come a little bit later today. But the most important part is you saw me. I sold here, I got stopped. I sold here again, I got stopped. I sold here on the third time, and that trade resolved positively. That trade, the third time, not only washed away all the losses, but put me into full profit on the whole trade cycle. That's how I do it. Does that make sense to everybody? Untouchable says that was ballsy. It's only ballsy if you got no money. You got to trade with some, you got to have again, I'm trading small size on a big capital base. I'm trading a $250,000 Apex account, which, by the way, here's your signups. They are dirt cheap. Go buy like 10 of them right now because they're like 80% off, and just hold them in your inventory. Wow, guys, there is some kind of a bug going on in my computer that is totally blowing up my computer. I am getting blown. This is twice I've gotten blown out of the uh, um, out of the session. Give me a yes, please. Give me a yes that you actually hear me. You see my screens. Fuck me. God damn, they just blew me out twice. Motherfucker. All right. Give me a yes, please. Let me see some yeses in the room. Yes, yes, yes. You hear me. Okay. All right. Okay, hang tight a second, guys. I'm going to try something. Fuck me. That was so annoying. Just bear with me a second. I want to try and do something here. I want to see if. Oh, I kind of understand now what's going on. Okay. This particular script is blowing up the. Okay. I understand this. Let me see this if this works. Let me post this over here. Let me actually post this over here. Tell me if you guys. I think it was blowing up my whole. Guys, I'm so sorry. One more time on all of this stuff. I just bear with me a second, guys. Oh man, what a freaking disaster this has turned out to be. Share. Okay, you guys seeing the screens, right? Okay, just bear with me one more second here. Fuck, this was. You guys seeing my screen, right? Okay, hang on. I gotta go over here now. Let me see. Charts, scalper. Let me do one more thing. Window, this, share. Okay. All right. One more second. I'm going to come up on screen with you. Okay. This should be working. I think the script that I have for the Apex link is blowing everything up. Anyways, go to Apex, use the BK code, BK save. Let me just see if I can just do this. Oh man. Wow. That just totally sucks. I'm sorry, guys. This will not happen again. I'm going to fix this tomorrow. But I think if I can do this, let me just make sure I get the link here. Okay. Wow. Fuck. That was crazy. I think the emojis and everything else just blew up the whole the whole Google Chrome thing 3 times today. I'm so sorry. Anyways, reversal signals in NASDAQ. This is the first reversal signal. This is the second reversal. I missed the second reversal signal. I'm sorry because I got blown out. But that would have been another good trade over here. We could have had, can have more trades. You guys get the idea. I mean, the most important thing I want to do right now is I actually want to do a poll with you guys to find out if you guys like. Do you like the new BFF scalper? Let's do a poll here. Let me know. I'd love to know your feedback on this. I'm going to try and short this at the 280 just because it's so I'm short this again just to let you guys know. Oh, I'm not logged in. Hang on, let me just log in. I'm not even logged in. Wow. Where's my other? Okay, I can't even show this to you. Sorry, guys. Everything is kind of blown off. I'm short at 73 right now, and looking for 63, and I'm probably going to just take 65 right now. I took the trade for a profit just because I can't show it to you on the screen because nothing is logged in properly on my screens. Everything's kind of fucked up. Anyways, let me know if you guys like this. Everybody like 91, 85%. Those of you who don't like it, please tell me why. What is it that you want to see? I need to have some feedback so I can understand what's going on over here. And the last thing I want to talk to you about, this is really worthwhile to have a conversation on because I want to show this to you, why I'm so consistent and to kind of understand what trading is all about. If you go to my feed today, right? I posted a really interesting tweet. Let me make sure that it's visible here. Okay. Just waiting to see if it's coming in here. Hang on. Okay. Everybody should see this tweet, right? Okay. So this is a super interesting tweet. And you guys can, if you want, I'm just going to give you the link to the tweet in the chat in case you want to read it yourself. But this was a basically a crystal ball exercise. What they did is they gave everybody $50 of money, retail traders, and gave them like tomorrow's news headlines and let them place the trade. So basically, they had like a 36-hour knowledge ahead of time what the macro data would be, what the non-farm payrolls would be, what the ISM would be, and then ask them to place a trade and then mark those trades over a year's period of time, right? What's the comment here? No more labels like 12 hours. Yes, there's no more labels because there's no point in the labels. And so the reason why I got rid of the labels is because it doesn't matter if it's label 1 or label 20. What really matters in BFF is the space between the short-term and the long-term moving average. If they're narrow, you have a lot of opportunity. If they're super wide, you're buying into overbought, you're selling into oversold. That's really what you need to know. So, I just simplified it that way in a much, much easier fashion. But going back to this particular crystal ball strategy that they did. So they gave people 36 hours ahead knowledge, said trade knowing that the data is going to be good, data is going to be bad, make your trades. And the irony of the whole thing is that 21% of people went bankrupt. 47% of the people did not make any money. And the ones that did made 3.25% over a year, which is essentially the same as random noise, right? The only, and they had a choice to bet between bonds and equities. The only people that had a marginal edge were people who bet on bonds. They knew macroeconomic data and they bet on bonds based upon the macroeconomic data, around 57% accuracy rate there, right? Which just shows why Kathy's structure works for what she does and why mine works for mine. If you notice, I don't ever talk about fundamentals because when it comes to equities, macro data does not matter. I know you think it might matter, but it doesn't matter. It's much, much more about flows, structure, and value entries and sizing. So the takeaways from this whole thing was that news does not matter, does not forecast direction. Sizing is much more important than analysis, and that bonds are the only macro bet that you want to make. Now, currencies are ultra short-term bonds. Okay, many of you may not notice, but currencies are essentially, the actual definition of a currency is it's like a one-day bond, right? Because it has a yield on it, and therefore Kathy's approach of using news to get an edge on currency direction makes sense because macro works on bonds, doesn't work on equities. So I thought it was just super interesting. I want to kind of close up today's live by explaining to you why I trade the way I do, why she trades the way she does, why both of our approaches are successful, because they are in sync with the underlying aspect of the market. Okay, that's kind of like where things stand. Blue Boy wants to know where you get the script. You get it from subscribing to our service. I'm going to give you a discount link, or if you want to subscribe to my coaching service, which is a really, really good discount link, I gave you both of those discount links over there. Okay. And now I'm so petrified to give you the Apex link, but the Apex link is going to disappear in 2 days. I'm going to modify this thing. Hopefully, it's not going to fuck it up again on the charts. But by the way, you see how good this was. The second sell reversal. Very often, by the way, the first sell reversal is a little bit early, but the second, third ones are money sell reversal trades. If you're a counter trend trader, these are great sell signals, and they're all built into the BFF. So just sign up. My best advice to everybody is sign up for my coaching session, because what happens is you get a 3-month price for like a massive discount. You get to hang out with me for 3 months, which is just the minimum amount of time you really need to be able to kind of absorb the techniques, the inventory management techniques, the exit entry strategies, all that shit. And get very comfortable, and you get to have private webinars with me where we kind of deconstruct anything that you need to fine tune yourself. Only 5% of people pass the prop test when they take it raw, like when they come in. That's less than people that get into the Ivy League University. 70% of the people who take my coaching session, pass the prop test. So there's a massive, massive difference in being properly coached than in just coming in, raw without knowing what the hell you're doing. So hopefully you guys will, we'll all do that. Let me just leave it again. Here's the coaching link right over here. Everything else is there. Hopefully you guys really enjoyed it. Another good session. I'm net positive today. Not a glorious session, but Mondays are always. It's always hard for me to trade because I'm coming off Kathy. We're kind of organizing. By the way, look at this. NASDAQ, S&P now goes negative bid, right? We're starting to show negative trade, and you see how the S&P now is going to start printing red candles and put you into the proper sell mental momentum. It changes your mental vision from being a buyer to being a seller, which I hope is really, really cool as far as the indicator goes. All right, my friends, I got to run. Everybody have a wonderful, wonderful day. I know it was kind of a totally fucked up day as far as logistics go, but it was a great day trading, which is the only thing that matters. Tomorrow, 4 a.m. London, we're going to trade Bitcoin. 9:15, as always, we're going to trade everything. I'll put up all the webinars in just a few minutes, so watch it on the streams, and I'll see everybody tomorrow. Everybody enjoy. Take care.